Alright, I hope everyone's having a great Thanksgiving. Welcome back. Let's look at the charts. Let's look at the market. First of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. These are my own opinions. It could be wrong. Stocks, bonds, crypto, everything extremely volatile, extremely risky. Do not invest in anything you're not willing to lose or lose sleep over. Okay, so my last video I said I was going to look at Bitcoin, and I forgot. I think I've done that a few times. Alright. Well, in the private group, I do throw up the Bitcoin charts, and we do talk about cryptos. Well, at least I talk about one. I only think one is worth the risk. The rest are, it's very risky. I'd only throw pocket change at it. On the right is Ethereum, on the left is Bitcoin. This is a 12-hour chart. I mean, I warned everyone, I think, Monday or Sunday, even prior to that we were coming up on a 9 sell signal on the weekly. And that played out perfectly. So, I don't want to go into the alerts room and show you all of the charts and drawings because I might give away some stuff. I do think this will be a pullback. How significant? I'm not sure. I mean, it's going to start hitting some support around 13, 14,000. And then it'll probably rebound. And it'll give you a nice giant cup and handle going into 2021, and then it'll probably go much higher. Not much. I mean, you guys have to understand, the higher the price goes on this, the harder percentage gains it is to make because the market cap keeps increasing. So at $30,000 a Bitcoin, what's the market cap? Like 800 billion or something. I don't know. You could do the math. I did it in the past, but I think it starts reaching like $1 trillion around 30,000. So at that point, you know, it's harder to make gains. Like expecting this to go to 1 million or something is it's not reasonable at all. That would mean everyone's using it in the world and no one could use it because it's extremely slow, extremely expensive. There's no point of it besides store value, I guess. But that's pretty much what I'm thinking. I mean, just throw a fib retracement on here. Hold on, give me a second. By the way, if you guys like this charting software, it's TradingView. There's a huge sale if you use my promo code. It's in the description below. You could get a 60% off, something like that. And the software is pretty expensive. Like I use the premium, and that's like, it's expensive. I haven't paid full price, but it's around $800 or over $1,000 a year. But with the 65% off, you just pay, and it's a one-time payment. Just pay like a couple $100 and you get the software. You can use all the tools. You could have 6 charts in one. You could do everything, right? So I'd take advantage of it. It's a one-time thing. It's the Black Friday sale, and they only do it once a year, and this is like the only time to get that 60% off. or is it 65? I don't know. The link will be in the description section. The sale ends, it's either tomorrow or today. I believe by the end of Friday, but I'm not sure. Might be the end of Thursday. Okay, so if I throw a fib retracement on here to the previous major breakout and major support, I would expect at least a retracement back to 38.2%, maybe deeper. The reason I say deeper is if the market corrects, there is correlation between the stock market and crypto. When the stock market tanks, so does crypto because of all the derivatives and the financialization of it. So anywhere between 14,000 and 11,000, I would be looking to possibly go into this. Also in the private group, I told them, if you're into it, because a lot of them are, Ethereum was lagging Bitcoin by a lot. And it had a huge rally in the past few days, and I said that prior to the breakout. And that would have been a nice swing trade. So let me show you guys. Give me a second. That was a weekly chart I was looking at for Bitcoin. So here are the moves. But if you zoom out, right, to the weekly to look at the previous all-time high for both, it's pretty obvious. Corn hit its all-time high, but Bitcoin always moves first, and then Ethereum, and then the rest of the shit coins that are all failing, except for one crypto I was talking about. I once made a video about it. Like, I talked about it briefly. It went up like 260x, but now it's all the way back down. So, but that's for private members. If you're willing to gamble, right? You wouldn't throw much at it, but throwing a little bit and seeing what happens in the next 5 years, maybe a life-changing decision, or you just lose it all. But that's the game. Higher the risk, higher the reward, right? Although I think it's built very well, and it'll probably outperform everything in the entire crypto space in the next 5 years. So yeah, here's Ethereum on the right. As you can see, it's way off from its all-time high. It's still off by 55% from its a few days ago all-time high. So this is how it usually moves. Bitcoin's the first mover, then it pulls back, then a lot of people go into altcoins and take profits from Bitcoin, and then the bull market continues as more institutional money is flooded into it. Now, Ray Dalio said something about Bitcoin, and he's like, maybe I was wrong about it. Listen, the game is they want to normalize digital currencies to get rid of cash, so they could track, trace, and database you, because they're going to come out with their own. They're planning on coming out with their own central whatever currency, global currency, or who knows, right? I don't think any of it's going to work in the long run. Maybe short term, and short term is 5 to 10 years. I don't know, but that's what they're doing right now. We'll take this day by day, week by week. So I think that's why they're letting it run. Also, it takes people's attention away from gold and silver, and that's what they're really buying. All the central banks are, and wealthy. So that's where I go. And not just that. I mean, listen, it's money, and at the end of the day, that is money. That is wealth. Right now, currently, the largest wealth transfer in human history is happening. That's because small businesses are being put under purposely. Central banks are printing money, and it's all going to the major corporations. And who's going to pay for all that? You peasants. And That's the largest wealth transfer in human history right now happening. Okay, now in the end, the fiats are going to all collapse, and then they might try to do the digital, right? That's if it all works out. I think such chaos is coming that nothing is going to work. So we have a lot to look forward to. Those are just my opinions. Let's VIX has got smashed all the way back down again. All right, so let's just real quick look at the bond market, then we'll look at currencies again. 10-year yield. Now you have to remember there is yield curve control, but you know, the 10-year interest rate, I mean, went up to 0.88. The market's gonna really start feeling it if it goes above a 1%. Then the market might start panicking, and then at 1.5, let's say, or 4.5, the market's really gonna tank. I don't think they'll let it get that high. The RSI, well, I don't know. The MACD could keep running. RSI is somewhat high. You have to understand, yield curve control, it only works if people play along. But if no one's trading bonds because there's no purpose, because there's no price discovery, no free market mechanism, their own manipulation will break eventually, right? Or maybe the interest rate won't go up, but the currency will just start tanking. And that's the risk they're running. As of right now, the correlation between the 10-year, the S&P 500, and gold is pretty obvious. The markets are still high relatively to the fact that the 10-year is starting to creep up higher. So we need to watch the 10-year, okay? And gold and silver has been getting smashed for the past few months, which is what I expected. Told you guys like 4 months ago I took profits on leverage ETFs and whatnot and mining stocks, which performed really, really well, which is awesome because I'm going to go do it again, right? Let's take a look at the currency, the dollar. It's just like holding on by a thread. It's just, honestly, as of late, I feel like the markets, the currencies, everything is just kind of in limbo. Not doing much, just kind of, market's kind of going higher slowly, but the dollar is just, it's been trading sideways around the 92, 93 handle, just trying to hold on. But as soon as they come out with more QE, which they will, in 2021, they're going to do more QE than they did in 2020, no matter who has the White House, right? So maybe it'll hold on for a few more months as the market goes a little bit higher, and then finally it'll just tank, right? That's what I'm expecting, because there's no way the dollar is going to hold on to the 92 and above handle. I mean, you know what? We're going to get a market correction, and this is going to happen quickly, right? Let's say in a few months, and then the dollar will rally, knee-jerk reaction, safe haven, and then infinite QE, and then it'll probably drop significantly in 2021. Maybe it'll be summer by then, so that buys the dollar 6 more months, maybe we'll see, right? By spring, I bet the dollar is going to be falling hard, because by then we have the market correction, not a crash. Know the difference. Correction. Okay, and let me explain. Alright, so this is what I expect. This is S&P 500 on a monthly time frame. We're going to get a correction, this red line. This is where we are right now. Red line, correction. And then this sucker is going to go straight up probably in 2021. And this is after maybe more lockdowns, or even if let's say the orange guy wins and there isn't a lockdown, it doesn't matter. The damage has been done. Main Street is collapsing. And they're going to print endless money. And the stock market is probably going to do like a phase 4 in Jenks's hyperwave theory thing, which is really the Wall Street cheat sheet. Okay. It's really this, right? You see this phase right here, the euphoria, the thrill. I think that's coming up. And that's going to probably take a year, maybe 2 to play out, 2021, 2022. So while the real economy literally falls apart, they're going to print endless money. It's going to, and all the big corporations are going to get it all. And the stock market's going to go up, and they're going to say, hey, look, everyone, the economy's recovering, when in reality it really isn't. And this is going to keep going on for a little bit longer, possibly, towards maybe the tail end of 2021, midsummer. The market will rebound, recover, and just go straight up. Let's say mid-winter, we get a huge correction into spring, and then the S&P just shoots straight up. Like euphoria, because they're going to be printing that, the Fed, central banks are going to be printing that much money. It's going to cause asset inflation, asset bubbles, right? And the stock market's going to benefit directly from it. The economy, Main Street, the rest of us, not so much, because we're going to see prices starting to really take off for groceries, energy, everything. And then eventually you're going to get it. You're going to get the big one, the big crash. Don't know when yet. Maybe 2022, 2023. I don't know. Again, there's outside forces. There's unknowns, right? Anything can trigger it. And in this dystopian world, and their game plan is, right? So we'll see. Maybe a world war breaks out or something. I don't know, but something's gonna cause this, okay? And this is the Wall Street cheat sheet, or the phases of a macro super cycle, right? Phase 1, adoption or new technologies, internet comes on board, robotic manufacturing like cars, this and that, the 80s, the early 90s. Here's the 90s to the 2000s, right? Dot-com bubble was here. This was the mortgage-backed security bubble right here. And then Obama, and then, which was QE, right? Janet Yellen's and Bernanke's QE right here, shooting the market higher. And then the orange guy got elected, and the euphoria started, and the market just went straight up. And if we zoom in, you can see right here, the cold came out from China, and we've totally rebounded, and we're making new all-time highs. And I think we'll go a little bit higher for a few more months, correction, and then you're going to see the market go straight up. Like nothing could ever go wrong ever again. Okay? Now, I'll talk more in depth later in later videos why I believe this. I'm just telling you now, because I feel like a lot of people will actually watch this. As of right now, though, the monthly chart for the S&P 500 here is on a 6 count. Then we're looking at a 7, 8, 9 count, right? 3 more months, maybe 4. And then I expect a decent correction. So how high will it go? I don't know. Maybe we'll get to 4,000 and then the correction. Maybe we'll get to 4,400, then the correction. I don't know. But as of right now, it just, somehow they've kept it up. long enough to where I'm wrong. I thought there would be a correction by now, by year's end, and there hasn't been. Maybe there will be. But TA wise, I was looking at the charts, and I think they're just gonna keep the music playing, and they're gonna come out with more stimulus as soon as we know who the real uh, president is, right? And then as soon as we find that out, then they're gonna come out with uh, more fiscal stimulus, which is from the government, and then the Fed's gonna back that up with more monetary stimulus, which is all money printed out of thin air, of course. And then that's just gonna shoot the market up a little higher. But eventually, we're just gonna see crazy, horrible economic data that not even they could hide. And people also, people psychologically just I mean, everyone's sad. I mean, try to not be, right? Take some D3 and then consult your doctor. We're getting less sun, right? So the winter blues. All right. Here's Apple. This is a bull flag. They're gonna make it break out. It's just gonna keep going higher, and it's not gonna make sense. Earnings don't matter. P/E ratios, nothing. There's no logic. There's no an analysis here. All it is how long can they print, and how much can they print, and how bigger can they blow this bubble. And unfortunately, the bigger it gets, the more painful it's going to be later on. Like, that's why I think later on, whatever control mechanisms they're putting in place right now, this dystopian Blade Runner world they're trying to create here. And I talk about this on my Twitter and in my newsroom, which is anyone could join. Links below. You got to just download that free app. You're gonna get everything as soon as it comes out news wise. It's like I'm pretty quick. I get the best feeds. Energy, I think it all depends on if we get confined in our homes again for months. And unfortunately, I feel like the sheep are just going along with it. But there is a mental breaking point. It's coming. It's coming. It's gonna be crazy. I think the spring and summer coming up is going to be dangerous, even in the suburbs, everywhere. All right, so let's talk about what is this? It's the cheat sheet. Macro cycles. So this is like the economics, the Keynesian economics they go off of. Okay, capital inflow and domestic credit increase. Increase in the number of non-performing loans. This is the credit cycle. And then you get credit contraction. So in the past, like, say 12 years, right? We've been in a credit expansion period for the past 12 years, since like 2008, 2009. And everyone's been taking on more and more debt. Just endless debt. Well, all that now is coming due. And earnings, well, cash and revenues have dropped off a cliff for your common people, your small businesses, mid-tier businesses, everyone. And that's creating a credit crunch, meaning no banks are giving out loans to anyone. Why would they? They're not going to make money off of it because interest rates are so low. And at the same time, they're getting bailed out by central banks directly through the Wall Street, through the markets, because they're buying up their corporate bonds, even for banks, right? That's what the earlier in 2019, that's what that was about. I talked about it. That was the the open window between banks and central banks. But the problem is, yeah, I mean, all of the big corporations are just getting the welfare while we get crumbs, and they're not lending out any money. So, and all of this was planned. They're just destroying their competitors to bring in one world, just, I don't want to say the word, but fash ism, right? So, but people are not going to be able to get credit going forward, I believe, into 2021 and beyond. Because, for one, I mean, a lot of people lost their jobs. For two, they know that they can't pay it back. Okay? But this creates deflation in the economy, technically. But if you don't offset that with the amount of products not being produced anymore and the supply chain breaking and people not working, then technically, yes, first it's deflation, but what comes after that will be stagflation to evidently probably hyperinflation. Okay, you have to understand this, and that's why all these people keep arguing about this. You just have to put it on a timeline. That's all it is. Everyone's right. It's just, when are you right? Okay. Okay, so here's the supply and demand. Okay, Austrian economics. You're a supply side economist, not a demand side. So the Keynesians think, well, people demand things. No, that's not true. I mean, yeah, it's true to some extent, but I'm saying you only demand um, basic needs like water, food, shelter, safety, utilities. Okay, um, the real economy is built off of supply side economics, meaning someone builds it and then they will come. So you didn't know that you needed a car until cars were made. You didn't know that you needed planes until planes were made, until an entrepreneur made it. You didn't know you needed a robot vacuum until it was made. I have like one of those Roombas. It's actually one of the best things. Um, so there's some upside to robotics. It's not all downside. Um, there's ups and downs to everything. But what I'm trying to say is, you didn't know you needed that gadget until it was made. So someone makes it, and then you want it. And what is infinite? People's wants. People want things. You didn't demand a hot tub until it was made, and then you're like, oh, I want that. Yeah, I demand it. Okay, that's Austrian economics. Keynesian is built off of demand. Um, so I just want to go over that real quick. So this creates a super cycle in the economy because central banks, along with central other authorities, want to micromanage the entire economy and get rid of boom and bust cycles. Now, boom and bust cycles are normal, and they wouldn't be as painful if central banks and governments were never involved. They would, like, nobody talks about the Great 20s depression. It only lasted like a couple months because no one got involved. There was no bailing out of anyone. Companies went under, things got bad for a few months, and then everyone just got back on the horse, and the economy did even better next time. And that's just how nature works. You need to get rid of the poorly performing companies. You need to get rid of the zombie corporations. And there was just a chart I posted like last week. Something crazy, like more than half of the companies are zombie companies in the US, probably even more in Europe. And what that does is it just creates Japanification, which is Japan's economy hasn't grown in decades and decades and decades. Do you want to live in a world where there's just no growth, nothing? It's just keeping it alive. So you do need that flush, that correction. And the longer they try to play God, basically, and kick the can down the road and print more money, eventually it will come. And it'll be forced upon these people who think they can micromanage and control all of us and everything in our lives. Like I just posted on my Twitter account, the stores are putting up like papers warning people you can't buy a turkey over 8 pounds because it feeds more people than like 6 or something, and you will have to sign something. Okay? I'm the fact that we've gotten this far is just there's if you're not pissed off every minute of every day, there's seriously something. You have Stockholm syndrome, all right? I don't want to go down that road right now in this video. It's Thanksgiving or the day after. I'm going to post this tomorrow. Okay, I need to calm down. And you know what? In a way, all these people going along with all this, they deserve the hell that's coming. I just hope that we who see this, we do what we have to and get out of harm's way, move out in the middle of nowhere, and that's why you should join the private group. The sale's coming. I think I'm going to do it Saturday, the sale. Okay? And then we're going to take advantage of these mining stocks while they're down again right now during this correction. And we're going to outperform everyone. Again, this year I outperformed everyone. Everyone, even in crypto land. Everyone. Like Bitcoin going from 3,000 to 20 is nothing compared to some of my mining stocks this year. And that was nothing. It's just the beginning. Okay? I'm looking for life-changing wealth transfer. The wealth transfer is not over. It's just begun. Eventually, the wealth transfer is going to start coming to us. Now, it is important, although, that the right person is in power after this election. It helps a lot. Okay? But even if not, I mean, they'll lose control. What else did I want to show you? Where is that chart? I can't find it. Huh. Pretty sure there was a chart here. Oh, here we go. So here's the correlations between presidents and stock market corrections. During the orange guy, I mean, we had a nice drop. It was like, what was it? An S&P. It was a 35% drop. That's pretty good. And the market has rebounded and made new all-time highs since. It's already gone up. So from spring, it's gone up 67%. That's insane. That is insane. It's wealth transfer right there. I just want to show you guys that. Just the comparisons. But during every single one of their presidencies, what happened? Well, during his, they took us off the golds. No, that was Nixon. The central bank came out, right? And then the market went even higher during every single presidency. The only thing that there should be a chart underneath this that shows you the debt. So the debt it's literally compounding, but it also doubles every term of every president, every single one of them. So looking forward, we're almost at 30 trillion for the US. 30 trillion. And that doesn't include unfunded liabilities and all the empty promises that are never going to come true. But look, the debt to GDP ratio right now is at 128%, according to current numbers. But the economic data is inflated. I would like to argue that it's more around like 200 to 200 and like, I don't know, like 50%, something like that, right? Why? Because the real economy is probably 1/3 the size of what it really is, because everything is service sector and financialized, and the service sector just got annihilated. And the economic data, there's a lag, like 6 month lag. That's going to come out in the winter of 2021 and beyond. So technically, the real economy, and when I say real economy, that's things being made. It's a fraction of the numbers. So let's say the real economy is around 8 trillion to 10 trillion for the US. But the debt is at 30 trillion right now. And after probably in the next 2 years, this national debt's going to go to like 60 trillion. That's Banana Republic, like coming. We're heading real quick towards Venezuela, and that's why the inflation will happen. Okay, like massive inflation. Like I don't know how people are going to live. And I feel like this conditioning that's happened this year over a hyped up, you know, that's really prepping us to be controlled under, home arrest and whatnot. So when you can't feed yourself because of hyperinflation, they have total control lockdown on everyone. This is all pre-planned. See, they have to have all the sheep in their cages before the storm comes, the real storm. And I'm talking economic. Also, it was a great excuse for central banks to print trillions and to continue to print trillions, buying what? A few more years? That's what's happening, in my opinion. So, yeah, guys. Unfunded liabilities is at 155 trillion. Add the 30 trillion to that, that's 60, 70, 80. That's 180. We're around 200 trillion. It's unreal. All right. So anything that's even closely perceived as a safe haven is probably going to go up in currency terms. But you have to be careful. Everyone's going to see the stock market go higher and higher. Again, though, the higher it goes, the less valuable those stock shares are in currency terms, and the higher you go in tax brackets as well. So you're technically not getting richer. It looks like you are if you price it in fiat, but again, once you adjust it for inflation, you're really not. So, but the mining stocks and all that, they're gonna go up like the worst is like 10x, in my opinion, in the next few years. Okay, so I'll bring on my sale Saturday. If you want to get in the private group, we share information. You can get more than you expect, and then I'm also uploading new spreadsheets right now. Take advantage of the TradingView discount. Discount is below this video in the description section. If you use my link, 60% off or 65, something like that. And then look forward to my sale to join the group, probably Saturday. So you pay the initial fee for the downloads and everything, the Trading Academy, and then $10 a month. And later I'm probably gonna raise the price on that. All right, guys, probably, it should pay for itself. It has for most people. So, and now's the time, right? So if we look at the gold chart, I haven't even looked at gold. This is what it looks like. We have a huge bull flag. Look what happened in the last bull flag. Look what happened in the last bull flag. Okay. Well, we have another giant bull flag. This is a daily chart of gold. And we're very near or almost at that buying opportunity for the mining sector. The mining sector has fallen even more. I'll make a video Saturday going more in depth about the mining sector. But yeah, this is that opportunity I've been talking about ever since I took profits like around June or July. All right, guys. So now I'm coming out with the sale, right? So you guys can now get in, not later, not FOMO, when the prices have already gone up 5x, 10x, or whatever, or 1x, or 60%, 50, 30% on these mining stocks. So the time is, we're almost there, if not now. All right. All right, smash them likes, leave anything in the comment section. Until next time.